Welcome to Mining for Infrastructure Development and Energy Transition edition of Fearful Investing. I'm your host, Dr. Bryce Nokielma. The information in this video is based on my years of experience investing in the stock market. I am not licensed to provide financial or investment advice. However, my years of experience in the geosciences and nursing equip me with the skills that help me figure out the intricacies of the stock market investing. If you're interested in any equity mentioned in this video, I encourage you to conduct your own research before putting your money in it. As a disclaimer, I do not have any relationship or business interest in any equity or business mentioned in this video other than buying and selling stocks in the open market from time to time. Thanks for watching. Send me your comments, likes, subscribe so that when we have a video, you'll be the first to be notified. Follow me on YouTube, LinkedIn, Facebook, Instagram. In this current video, the aim is to explore mining stocks with focus on Vale, BHP, also known as BBL, and Rio Tinto. As a matter of updates, we can now say that the infrastructure bill has been passed. It was passed on Friday, November 5th. Also, the president's budget that initially was projected to be 3.5 trillion has been trimmed to 1.75 trillion, and it's on course to be passed before Thanksgiving, according to Congress. So we are focusing on infrastructure development and energy transition, and we have three stocks to discuss. Vale is a Brazilian mining giant. Yesterday, it closed at $12 per share. In the past 12 months, its price has varied from $11.40 to $23.18. There is also Australian mining giant, BHP or BBL. This company has international operations all over the world. Yesterday, it closed at $52 per share. In the last 12 months, price has ranged from $51.90 to $82.07. Note, BHP and BBL from the same company, they trade on two different stickers or symbols. BHP is usually trading a couple of dollars higher than BBL. So the closing price of $52 was for BBL. BHP actually closed at $54.71 at the price range of $51.90 to $82.07, which is 12-month period, is for BHP. Of course, there is Rio Tinto, which is a London-based global mining giant. Yesterday, it closed at $62 and some change per share, and in the last 12 months, it has traded from $60.17 to $95.97. So the variation can be explained by this chart. This is iron ore, which is their primary product. So the stock tends to follow the trend of price of iron ore. In the last 12 months, it has traded from about $120 per metric ton all the way to over $200 in the month of May, June, up to the month of August before it started trending down. You see this sharp decline here. That's in response to the economic policies the Chinese government is pursuing. They are trying to cut down on their CO2 emissions. As a result, they think they have to cut down on their steel production. Because they are cutting down on steel production, their demand for iron ore is going down. Because the demand is going down, the price is falling. But the good thing is most of these companies produce iron ore at around $35. per ton. So even if they sell it for $70, they are still making 100% profit. So $94, they are making profit. $150, they are making profit. $200, they are making profit. So based on the profit they make, and based on what their investment plans are, if they are developing new projects or if they just want to return excess money to shareholders. So their dividend tend to be huge and variable. So going a little deeper, Brazilian mining giant was founded in 1942. So it's been around for quite some time. So its principal products include iron ore, industrial minerals such as nickel, copper, platinum, etc. Then it also has a basket of precious stones such as gold, silver, and so on. So dividend payment history, like I said, is variable. In the last time they paid, that was September, they paid $1.50 per share. Before that, they paid 43 cents. Before that, they paid 73 cents. So it's variable. Again, it depends on how much they've made in the 6 months period and whether or not they want to return more money to shareholders versus spending more on projects. This is kind of deceptive. This is giving 25% dividend. That's not right. It's assuming that it's going to pay $1.50 2 times in a year. So that's why you have this $3 here. It could be less, it could be more, but the dividend is variable and it's definitely not 25% dividend. For BHP, BBL, again, they are huge on iron ore. They have industrial minerals such as nickel, copper, uranium. They are also huge on gold, silver. They have oil and gas operations. I think they are trying to divest from their oil and gas business. They want to do that with Woodside Petroleum, another Australian company. So like Vale, the dividend is variable. The last payment was $4 in September. Before that, they paid $2, and before that, they paid $1.10. Again, this is annual dividend of $8. It's not guaranteed. It depends on how much money they have and they make from their products, which is dependent on commodity prices and also how much they want to invest in future projects. And mining companies have these other added risks. They have every now and then they have disasters, which tends to take a lot of their time and money to take care of. So that's another risk involved in investing in mining companies. But again, they have been around for so long. This one was started or founded in 1851. So it's been around for 170 years. So it doesn't seem it's going anywhere anytime soon. So long as humans exist, they will always need iron ore. They will always need all these industrial minerals. Nickel is a huge player in the transition to electric cars and batteries and all that. So, and of course, uranium, copper, these are materials we're gonna need, we'll continue to need. We've needed them for a long time now and we'll continue to need them. Of course, precious stone, gold and silver, not going anywhere. Last but not the least, we have London-based global mining giant that was founded in 1873. It's huge on iron ore, also industrial minerals such as aluminium, copper, titanium, uranium. It has a portfolio of precious stones such as diamond, gold, silver, and it has refineries and power stations. Like the other two, it pays a variable dividend. The last dividend payment was $5.61. Before that, they paid $4, and before that, they paid $1.55. Again, it's variable, depends on how much money they make from selling their commodities and how much they want to allocate to new projects. So new project versus wanting to return more money to shareholders and determine how much you get in dividend. Okay, I will just show you guys. This is the chart for iron ore as a commodity. Like I said, is varied from, in the last year, varied from $120 all the way to $212 in May and up to $220 in July, and then it started going down in August. Okay, it closed yesterday $94.34. Again, so long as iron ore is over $35, they make profits. That's how much it takes them to produce it, and the higher it sells, the more money they make. So today, November the 9th, the market is a red day. Much of the stock prices are low. This is Vale, is $11.98 at this time. It's losing about 25 cents today. And let's see how it trended in the last year. By this time last year, it was around 11.68. So now it's 11.98. I think is pretty much in the bottom here. Anybody that wants to buy it should consider coming in. I don't know how much further it will fall. Nobody really knows. But again, it pays good dividend. Let's see, in the last 5 years, the lowest price in 5 years is $8.25. Will it get down there? I don't think so. With the infrastructure bill in play, I think demand for commodities will start picking up regardless of what China does. I think the demand from the US can easily counter whatever that is coming out of China. And it's not likely that whatever they're doing in China is sustainable. I think at some point, things will start taking care of themselves. So let's look at BHP. In the last year, BHP traded in November last year, it was in the 53 range. So it got up to $79 in May and up to $78 in July before it started heading down in August. Again, is in response to policies in China, which is causing the price of iron ore to go down, and iron ore is the chief commodity of all these miners, and if it's not selling hot, their income will not be hot. So that is it for BHP. Again, this is 5-year view. The lowest price was in July 2017 for $35.59. And if we check on Rio Tinto, last year, or in the last 1 year, it came down to 62.51. Right now, its current market value is $16.99. It got up to $97. But like the rest of them, in August, it started trending down heavily. I don't know what the bottom will be, but at 16.98 is lower than what the price last year. So if you like the dividend they pay huge. It's one of the highest paying dividend stocks out there, and it's been around for over 100 years, and it doesn't seem it's going anywhere. So I would think it's a safe investment. You know, you can use the dividend you get from these companies to invest in more speculative or hyper growth stocks. And that's the strategy of fearful investing. Invest your money in stable companies with record of performance, and then you can get more adventurous from there. Once you know your investment is secured, you can use whatever you're getting from those investments to explore more risky plays, okay? So thanks for listening and subscribe to the channel. I would like to hear from you guys. Follow me on Facebook, Instagram, YouTube, LinkedIn. Thanks for watching.